Hi everyone, welcome to the YouTube channel. We have a special guest with us again. We're talking about acreage and residential on this one. But from Mortgage Connection, it's our good friend Cory Lewis. How are you, Cory, today?
I'm doing well, Stu. How are you doing?
Yeah, okay, with all the stress, of course, that we've got with the way mortgages are going. But they're talking about a new mortgage hike as well, aren't they? And
they are, yeah. We might see that prime lending rate go up another 0.25%, which will, of course, impact all of those variable rate and home equity credit line rate clients out there.
So, okay, we're going to talk about buying an acreage home over $1 million and what it entails. Sorry, it also applies to residential, yeah?
It absolutely does. So, I mean, the biggest thing to keep in mind, once you get to that bracket of $1 million or over, you are no longer able to get a CMHC insured mortgage. They do not insure properties valued over $1 million. And so what that means is the very minimum down payment will always be 20% because you can't insure that mortgage. However, most lenders have what's called a sliding scale, Stu. And what that means is they won't typically lend you 80% of the total purchase price of these properties. So a sliding scale, for example, some lenders might say they'll lend you 80% of the first $1 million of the value of the property, and then they'll only lend you somewhere between 40 and 60% of the value over that $1 million. So the total minimum down payment, can be a lot more than 20% once you look at these properties in the $1.5 million range, for example.
What about, just a quick question. So you're buying an acreage. It's easy when you're buying, if you like, a country residential in Springbank, say, on 2 or 4 acres. But it doesn't make any difference then if it's say you've got 10 acres and, and the bank will only they'll only allow so much of the acreage, won't they? Can you give us your brief on that?
Exactly. The value that the bank gives the acreage is not necessarily the market value. So it's lender dependent. Every bank's a little different, but typically you can expect the bank to give value to the house, the garage, and a certain number of acres, and maybe that's 10 acres. So if you're buying a 40-acre property and there is major outbuildings on there, a shop or a Quonset that's worth, a fair bit of funds, you might not, they might reduce the value by the value of those outbuildings and any acres beyond the first 10 acres of the property, for example. So again, that can vary from one lender to the next, but that can also result in a larger down payment requirement because again, the bank's only going to give value to house, garage, and a certain number of acres.
And depending on the lender, stables don't come into it, do they? If you've got you've got a 4 acre and you've got 1 horse and a stable, you're not given anything for that.
You're not given the value of the stable in most cases. ATB, there's certain lenders that do have programs that will give a little bit of value to outbuildings, but it's typically not very significant, no. One more thing I will mention, with those sliding scales, it can vary based on location. So if you're in an area like a major urban center where, a lot of properties are valued over $1 million, say Toronto or Vancouver, the sliding scales are based on location. So a lot of those locations, it might be that they'll do 20% down up to 1.5 million instead of 1 million. Whereas the more rural the property is, that's kind of when we get those more, restrictive, the sliding scales, where you might need a larger down payment.
Okay, well, that'll do us a short. And
sure.
We'll probably talk to you in the next couple of weeks and we'll pick another topic. Thank you.
That sounds great.
Thank you for watching our video. We hope you enjoyed it. Please subscribe to be notified of new ones.